Welcome to Ctrl Alt Invest. I'm Jason Vondersmith. I'm here with James Goodwillie. I know you're doing well.
Mm-hmm.
It's great to see you again.
Good to see you.
Happy Easter.
You too?
I heard you did a wine bottle Easter egg hunt. Is that true?
Yeah. Well, went to a winery vineyard. Wish they had Easter eggs that were wine bottles, but they did not. Yeah. But it was great.
That sounds like a missed opportunity.
I'll submit a little writing request to the vineyard for next year.
Yeah. And I think when you go to a vineyard on Easter, it's sort of a way to shake it up and do things a little differently than normal.
Yeah.
Which is what we're doing here as we shake things up and do things differently.
I like that.
And today we're going to do that with the context of diversification.
Awesome.
It is awesome.
Yeah, I like that.
People love to diversify.
It's a big word. Anybody who has ever talked about finances that's the first thing that I feel like they start throwing out when they start understanding money a little bit or think they understand money. I think diversification is that big buzzword, right?
Yeah. Remember Meet the Parents or Meet the Fockers, one or the other?
Yeah. Ben Stiller movie?
Yeah.
Yeah.
And Owen Wilson, his character, was asking Ben Stiller about his portfolio.
Oh, yes. He's the one that did like the woodworking and stuff too. Yes.
He's like, yeah, well diversified.
Uh-huh.
I'm pretty sure.
Yeah.
Well, we have another guest today, which is just fantastic.
Yeah.
And the reason we have a guest is I'm in a mentorship program. And our guest had made a post in there that really resonated with me. And we'll just start off with the hot take. He said, diversification is a lie. And I perked right up.
I love a good hot take.
Yeah. And so our guest today is Jordan Brown. Jordan is a Utah State Aggie.
Sweet.
Go Aggies.
Yeah.
There was actually one of my favorite Terps. This is very recent. Now I'm drawing a blank with his name, but he was a Terp a couple years ago, and then he played basketball. He's over at Utah State, but I think he graduated. I'm sure Jordan knows him. Jordan got started in sales, and he went on to be director of investor relations, and he found a way to combine those with self-storage. Like we talked about in our last episode, of course, most importantly, he is happily married for 7 years. He has 3 kids and super, I'll drop it, exciting, twin 5-month-olds. 5-month-olds.
Wow.
Yeah.
Wow.
So speaking about having a ton of time on your hands too. Yeah.
Yes.
Or really diversified. I guess you're not diversified when you have twins.
Yes.
Outside of his family life, he likes dirt biking, a general
Wow.
junkie. Yeah.
That's cool.
He's a golfer, 70s, I bet.
Yeah, for sure.
Yeah, Utah State, dad.
Twins.
Yeah.
Yeah, well, maybe he might be in the 80s now if he's got twins.
And he loves coaching others on self-storage investing.
Sweet.
In 2019, he bought his first deal, 177 units. And there's also some commercial space and a duplex. So actually, non-sarcastically, that's quite diversified for an investment.
Sure.
Yep. And today, he's, again, merging his finance chops with his love of commercial real estate and his love of mentorship. You ready?
Let's bring him on.
Jordan, welcome.
Hey, good morning, guys. Thank you for having me on.
Oh my gosh!
Thanks for coming. Yeah.
How did I do that intro right? You shoot in the 70s?
I think James put it pretty good. That I used to, but now with twins, it might be in the 80s.
Yeah.
Actually, Saturday over the weekend, I got out. I played really well. I shot a 78, and then I went out. That was Friday evening, and then Saturday I was like, hey, I'm back. I got this. Went out the next day and got very humbled very quickly and shot like a 46 on the front 9. So I'm like, I'm done.
Yeah, but it was way windier on Saturday, I'm
Yeah.
sure. So again, welcome to the pod. We're excited to dive into all these topics that we've discussed. I want to start with your post that got me so excited about diversification being a lie. And we'll just go right in on it, right?
Yeah, let's do it.
What did you mean by that? especially considering your background in finance?
Yeah, absolutely. For me, I've been very obviously focused on finance and investing for many, many years. It's a big passion of mine. Um, and obviously, you guys are probably very similar to me, where a lot of the times it's mainly majority of what I think about is investments and different strategies and setting my family up for the future and what's going to be the best way to go about that. So, a little bit more quick background about me. I got my first storage facility in 2019. And then my wife was a school teacher. And when we had our first child, she we were fortunate enough where she could stay home. And I'd kind of automated my first facility, and I said, hey, what else could I do for another career? So I was like, well, I love finances. Let's go down the route, be a financial advisor. And so I got my Series 7. I got licenses. I worked for an investment firm for about 2 years. And very quickly, I just realized that wasn't really the space for me. So I think when I think of diversification, so many people want to be diversified in different stocks and bonds to hedge against their downside risk, and maximize their earning potential over time. But really, when you think about it, it's okay. I'm going to put some money away every single month into my Roth IRA, into my 401k, and then I hope in 30, 40 years I'm going to have enough money to live off of, and that's the hopes. And you know, some of the best experiences I had when I worked at the investment firm was when I sat down with clients and they did have enough where we could say, "Hey, your needs are met." But for the majority of people, they're scrambling, and there's this fear of, "Hey, I'm 45, I'm 55 years old, or I'm 65, and I don't have enough saved. I don't." There's the unknown of, can I provide for my family moving forward, or just myself, and with health unknowns and just everything else in life. So, that's obviously got me thinking a lot more on, okay, what's the best way to build wealth for me and my family and for future generations. And ultimately I found it's being taking whatever your strengths are,
Yep.
focusing on that, and leveraging those abilities into other opportunities to grow wealth.
For sure. I love that. And what I like to do a lot is I throw it over to James for the well thought out expert take. And maybe we take a quick step back, because I love so much of what you've brought up to start. When people think of diversification, James, what do you think most people would like? What do we mean by that?
Yeah, I think you hit the nail on the head of between stocks and bonds, and kind of leveraging that downside risk. But I think the vast majority of people look at it of, like, if you were to say you need to diversify, they're going to think, okay, well, I'll diversify the choices that I make in this different stocks in my 401k, right? Like, I won't go all in tech or something like that, right? I'll go in tech and Amazon, or I guess Amazon is tech, but they'll just look at it from a stock portfolio perspective and not all the asset classes, kind of as a whole.
For sure. Here's an interesting stat that you guys can munch on. Over the past 15 years, because I agree with you, most people, they're like, okay, I'm in, just like Owen Wilson, I'm in a little bit of stocks, a little bit of bonds, kind of making sure that I'm got my bases covered.
Mm-hmm.
For the past 15 years, diversified portfolios have lagged behind just owning the S&P 500. And most asset allocation funds haven't beaten the index since 2009. And so, Jordan, with your background, especially when it comes to financial advising, what do they tell you to tell people, right? Because James and I have talked about financial advisors, and I know a lot of financial advisors, and
Mm-hmm.
I think the majority, you tell me, I feel like the majority of people who get into that space want to actually help and want to say, okay, maybe somebody's too busy, they're not sure what to do, like, let me get them in the right space. But you're not, correct me if I'm wrong, as a financial advisor, you're not welcome to just do whatever, right? Don't you have to sell what your specific company allows you to?
Yeah, I mean, first and foremost, I mean, you have a fiduciary responsibility to your client to, put their needs first. However, depending on, who your back office is or, brokerage that you go through, they have their own specific products that they're going to want to push for you to sell to your clients. And then that's going to be based on, is it going to be what type of class shares is this investment product? So essentially, is the advisor going to get a commission up front? Is it going to be an advisory fee where they're going to have 1% of assets under management moving forward? There's a lot of different ways you can go about it. So yeah, and that was what was for me. I think majority of advisors that I've met, they have great intentions. They want to help out their clients, but I quickly found there's a lot better ways going about it.
Yeah, that's super interesting. What do you think the breakdown is percentage wise of people in that space that get into it because they want to make money? So either just because they want to make money, or they have the best, they want to help people, or some sort of like combination of the two. Like, I can make a ton of money in this field while also helping people, kind of thing.
Yeah, I mean, I think majority of people, it's a great industry to make a lot of money. So
Yeah.
that's probably drives a lot of people. And naturally, just wanting to help people might be a benefit of that. But yeah, having the financial security and opportunity in that space will play a big factor. And there's a reason why you see majority of advisors aren't younger, is because it's kind of hard to get in, build your book of business over a few years, and really grind during those early years to establish yourself. But yeah.
Yeah. And one thing that I think is implied by diversification is that it eliminates risk. That if I'm diversified, any one event is not going to impact me.
Mhm.
But you look at 2008, you look at the pandemic, diversification saved no one.
Sure.
Harry Markowitz, do you know Harry Markowitz?
Mm-mm.
The father of something.
Okay.
Yeah. Famous guy.
Uh-huh.
Let me tell you how famous he is. You ready?
Mm-hmm.
You're going to have to wait. He was an American economist. I learned about him in school because I'm an economist. He was renowned for founding modern portfolio theory.
Okay.
And I think this is the genesis of diversification as like a strategy.
Interesting.
And one of his famous quotes was, asset allocation is the only free lunch in investing. Fact or fiction, James, that it's a free lunch?
Fiction.
Yeah.
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 No such thing. There's no such thing.
There is no such thing.
Yeah.
In fact, I was learning, or I was listening to a podcast this morning, and they were talking about the concentration. Here's another fun fact, that the number of companies on the I'm not sure which exchange or all exchanges are I guess publicly traded, has dropped by like 40% in modern times.
Oh, wow.
So how are you supposed to diversify when there's this collection of companies at the top? A lot of that has to do with mergers and acquisitions, which has gotten out of control, and something we can talk about.
Murders or mergers?
What did I say?
Murder.
Did I?
Yeah.
Oh.
Which is a funny way to say it, so it's fine.
Yeah. Murder one company and acquire another.
Yeah.
Mergers and acquisitions. Thank you. And the other stat was that, we've talked about how real estate always tends to appreciate. Over time, the stock market always goes up. But the stat was that there's only 7 companies in the last N number of years, I think it's short term, 5, 10, 15 years, that have driven any growth in the overall market. It's all been concentrated in what do they call the top, the Magnificent Seven or whatever it is. So Jordan, with that, and pivoting away from the stock market because of those sort of things, and if we think that diversification is maybe not an outright lie, maybe it is a lie, it's at least potentially misguided if you're not using it correctly. Jordan, how did you find your way into commercial real estate, given that you were kind of heavily involved in the traditional stock market for a period of time?
Yeah, I knew I always wanted to get in real estate. So I was lucky enough. My grandfather, who recently passed, he always told me this. He always had this saying, and he said, "You are always you're either paying rent or you're collecting rent." And I just loved that growing up and going to, he never had a big portfolio, but he had a couple rental properties, and it allowed him to have flexibility in his later years. So I knew that I always wanted to get into real estate specifically and grow a portfolio there. Um, so that kind of just naturally led me to learning more. I listened to all the bigger pockets podcasts, and start reading, Rich Dad Poor Dad, and kind of some of the classic beginner go-tos. And in my early 20s, and then when I was in sales, I was fortunate where I was able to make some good money during the summer times while I was going through college, and started just saving. And over a few years, I was sitting on some capital, and that's when I knew I was like, hey, I really want to get into storage. So I was looking at either acquiring existing facility or going and building one, and that kind of led to the opportunity that I had. That was my first start into the real estate space. And then very, very quickly, I realized, hey, there's a lot of levers that I can pull here to increase my cash flow, to increase, the valuation of this property, because it's not based on comps in an area like a single family. It's based on your net operating income. And I was like, hey, there's really something here. And that's when I just went all in on commercial real estate.
Was there any others that you were contemplating going after, in addition, or like when you were taking a look at storage in particular? Were there any others where you were like, they were in kind of like your top three of like, maybe I'll investigate these couple more?
Honestly, in the beginning, I was trying to go for that triplex, fourplex, house hack, get in and just acquire something where I can, start leveraging good debt essentially. And I was very interested in the flex space, light industrial, and storage specifically. Multifamily, anything that's going to be large enough to where if a tenant moves out, it's not going to really impact me. I didn't quite have enough capital, or dry powder at the time to get into that. And I quickly looked at storage as, hey, if I can get something with 100 doors, 150, units, I can quickly leverage that. So that was kind of how I focused.
Was there a moment where you maybe soured, and if not, that's fine too, but you kind of looked at the stock market and you were like, this is kind of bullshit?
Honestly, I think it's still, for the majority of people, it can still be a great opportunity. It's not that I'm so anti, stock market, where I think for the average person, if you don't have the grind and the hustle where you want to go out and find opportunities in real estate, and manage it, sure, just do your Dave Ramsey, put money away, don't think about it for 40 years, and cross your fingers. That's kind of the way I look at it.
Yeah. Oh, sorry. Go ahead.
Yeah. So that was kind of just where I was going to go with that. And so there's never that point where it was soured against me, but the kind of aha moment I had was after I had my first real estate deal, because I bought it for one price. I came in day one, I rented out this space that wasn't being utilized. I increased rents because they were below market. And within 6 months of owning this asset, I looked and said, I just increased the value of this property 800 grand. And I was like,
That's
That's
fantastic.
amazing.
Yeah.
holy crap, let's do that again.
Yeah.
I love that. And funny enough, this was an article I found end of last year. Mark Cuban said, or he argued that diversification is for people who don't know what they're doing.
Hmm.
And I think that kind of hits on your point. And you, again, you're crossing your fingers. Hope is not a strategy. If you're in the stock market and you you don't know what you're doing, you end up just participating. But the price you pay is so high, and I think that's what the underlying point here is on diversification, at least in the stock market. You're paying fees to want, if you do have a financial advisor, they're getting their cut. The market always takes their cut. And so you might think that you're well diversified and that's okay, but you're you have no agency, like Jordan's talking about with I manage this property better.
Yeah. Yeah. I mean, betting on yourself if you know what you're doing or have the passion to do it. I mean, I feel like betting on yourself is always the smart play.
Jordan, how do you view diversity in terms of real estate? So you mentioned a couple different asset classes. Do you find yourself wanting to spread out in real estate, or you mentioned storage, have you kind of fallen in love there and tried to focus in that one space?
Um, yeah, I think I'm open to the idea of obviously diversifying. I have a duplex, I have a triplex, I have commercial, light industrial office space. So I am diversified, I should say that. However, within that realm of commercial real estate, or even on the resi side, um, there's certain classes that I like a whole lot more than the other. I mean, my specialty is in storage. I feel like I can go in, I can look at a deal. I know if where opportunities are or they're not, versus if I go into office space, that's something that my expertise isn't nearly as good. I'm comfortable with it, um, but I like to specialize in storage. And then also with like my duplex and triplex, I very quickly realized I don't like to be a property manager. So I'm not looking for opportunities in that space right now. Now, if there's an opportunity that comes my way that is kind of a no-brainer, like, sure, I'm not opposed to buying more, but I've found that the quickest way for me to grow my wealth is to focus on what I'm best at, which is storage.
Interesting. So I feel like a lot of the listeners, they look at stuff, especially in the real estate front, and they say, that's the learning curve there is just too big, right? So how long do you think, timeline wise, did it take for you to go from knowing nothing about storage, to saying this will make me money? I'm confident that I can make money on this.
Time frame wise, that's kind of hard to tell. I would say for the most people, it's not until you actually have a deal, and
Yeah.
you're going through those steps, and you're trying like, hey, I'm doing my rent increase, and oh man, I jumped rents way too aggressive, and I had people move out, or
Right.
I did my rent increases, but nothing happened, and you kind of you learn where that balancing point is. Um, so I think it's really just for someone who doesn't have a deal yet, it's knowing that there's so much opportunity in this asset class or within real estate in general. Even if we go to duplex, triplex, fourplex example, it's someone that is younger and they, you know, don't have as much capital to deploy and they want a house hack. Well, awesome. You're getting into the space. You're leveraging good debt. You're getting principal pay down. You're getting depreciation and all those benefits that we love about real estate. And as you're in the game, you're going to learn and you're going to grow. And then the big thing, like with Jason, he's part of a mastermind, this online group where we're learning together, and
Mm-hmm.
we can learn off other people and what they've experienced. So I think not just leveraging good assets, but leveraging opportunities and those around you. will help you learn
Yeah,
a
that's
lot faster.
that's a great answer. I think, and I think that's what a lot of people want to hear, right? It's there necessarily isn't, besides learning the basics, the real understanding comes from actually doing it, as opposed to just being like, you know what, I'm going to research this for 5 years and then I'll feel comfortable to do it. I love your answer of just being like, it really wasn't until I got the first deal.
Yeah. Diversification of knowledge too, knowledge sources, and going outside your inner circle. Wall Street's version of diversification, it's like a casino telling you, don't put all your chips on blackjack, play some roulette too, and try the craps table as well while you're here. But here's what they won't say. The entire casino is designed for you to lose. The odds are stacked, the drinks are overpriced, and the house always wins. At Bondi Capital, we're not playing their rigged games. We're buying the casino. How? By syndicating self-storage facilities. The ugly, bulletproof ATMs that pay us rent while everyone else chases hot stock tips. Storage units don't care about Fed rates or meme stocks. They just cash flow like clockwork. Want an invite to stop gambling? Visit bondicapital.com and book a call to learn more. Learn how we're cutting out Wall Street's middleman and owning the casino. So, James, why do people put money in the... Well, let me phrase it this way. You guys were talking about not knowing real estate or maybe being afraid. I don't want to risk my entire portfolio, my entire savings on one deal or one asset class. Yet, a lot of people are comfortable with having all their money in the stock market, and maybe diversification's that warm, cozy blanket that's like, at least I'm diversified, it feels safe. But I think the average person, they don't know what a market is, why a stock goes up, why it goes down. Why do you think people are so comfortable having their money there? But when you start talking about these different things, whether it's a duplex or a storage facility, they're like, well, I don't know.
I think, a lot of it is probably lack of education. And I'd say the other big piece to it is the what people think is attainable versus not, right? Like, I feel like everyone understands the concept of like the stock market. They understand you're buying a piece of the company, right? And they understand the values fluctuate. But I don't think a lot of people, if they look at real estate, whether it's you name it, right? Even buying a house, right? No, I had a mortgage company for a while, and most people didn't even realize that you could, like simple things, you could put less than 20% down, right? And that's like a very standard thing. So to approach someone, even people that had plenty of money, that had 20% down, they thought that's what they had to do. So people that might look at storage or might look at a commercial property or industrial or whatever, they just look at that and go, I can't do that. I don't have millions of dollars, right?
Yeah.
So I'll just take that, my $100,000 or 200,000 or whatever I have, even less, 10,000. I'm going to put it in here.
What do you think, Jordan?
Yeah, I think first off is you don't need money to get in real estate. That's and for the most people, it's, well, I don't even know how that's possible, and that's the hardest part. And it's gain the knowledge, make connections, find people who have done what you want to do, and learn from them. And really, that's what I've done. And with I got my first deal. I was working at an investment firm, and kind of leading into the whole syndication part of it. For the longest time, I was just going to buy deals by myself, and that's how I viewed things. And I found a deal that I'm at right now. A storage facility was listed for like $3.5 million, and I didn't have enough money for the 25% down with the bank. And I was like, well, okay, well, let's do a syndication, and let's do an addition. So we needed to raise like $1.8 million on it. Funny enough, my back office at the investment firm said, well, you can't do that. what's called selling away. I'm essentially creating a separate security, and it's against guidelines. So it's like, okay, I quit. So
Nice.
see you later. But anyway, so then me and two other guys came in, and we syndicated this deal. We raised money and got into it. So and it's been a great asset to have. So I think for a lot of people, it's find opportunities and surround yourself with other people that are like-minded, and just find a way to make things
I
happen.
love it. I love it so much. And we've danced around this a couple times on different episodes, and maybe I've said it, maybe I haven't. I'm going to say it now. When you're, to Jordan's point, when you're using a company, you are not open to the world of options. They have a subset of things that say that that says this is what I'll do with your money, but you're not getting the whole gambit. And just like he said, I wanted to put somebody's money in this deal that made a lot of sense, and they were like, no, you're not doing that.
Yeah. Yeah. Yeah, that's a good point. So you brought up something that I think is interesting, and I want to dive a little bit deeper into, is the raising the money for it. And I love the point that you made that you don't necessarily need the money to get into real estate. And I think that's a super important piece that everybody listening to this should recognize. But I have to imagine people's next question is, all right, well, I don't have to have the money, but somebody else does. So how do I do that? Right. So walk me through that process of going and getting the additional funds necessary to make that deal.
I think a great place to start for anyone that just does, I'm brand new and I have no idea even what you're talking about, Jordan, how do I even go about it, is surround yourself with other real estate entrepreneurs that are passionate about the space. So I'm located in Oregon, and I drive 3 hours every single month to go to a real estate meetup with about 150 people. Connected with, over the last year, people from all over, different multifamily, industrial, the resi side, and I've made all these connections with individuals that have opportunities. And if I might not have the capital, but I have the energy and the know-how, and I'm willing to learn and to say, hey, I'll come in, I'll manage this whole thing, I'll do all the sweat equity for you. But maybe two other people have the capital, or have the means to raise the capital. So that's a perfect example. I'll come in, I'll get 5, 10, 15% equity in this deal, and I'll run the whole thing, and I'll learn. I think that's a fantastic way to start.
Yeah, that's perfectly said, and I love what you said there. The sweat equity, right? I think that's the one of the most beautiful things about real estate and these syndicated deals and stuff is sweat equity matters, whereas sweat equity is jack shit in the stock market. Right, it means nothing. Yeah. I can't go to Apple and be like, hey, will you pay me a little cut if I promote your business on YouTube? Or that's not going to do anything. Or but I think, or if I get my buddy to buy an iPhone, right? But I love that it does matter in real estate, and you yeah, I like that.
What a fantastic point! Like if you like when you go to when you buy a stock, you are technically part owner of that company, right? And you could go to a stock meeting or investor meeting, whatever stock meeting, investor relations meeting, whatever it is. Hey, Mr. Cook, I have an idea for our marketing campaign. What do you mean our marketing campaign?
Right.
This guy over here owns 70% of the company. It's his marketing campaign.
Yeah.
Yeah, that's really funny. I think when you talk about, most people don't know this, it's just we've brought it up before. It's a lack of education. I'm curious how we got here. Jordan, you said very early on that your grandfather kind of opened that door for you, that said you're either paying or collecting rent. Which one do you want to do? And Rich Dad, Poor Dad was that came out in what? Was it the 80s or the 90s that came out? He wrote that book.
I want to say 90s.
Was it? Was it even one later than that, wasn't it? Whenever it was. And so many people bring that up. My life was changed when I read, because it's about owning an asset, something that works for you. And Jordan, we talked about you being a family man now. You have 3 kids, you have twins. How do you plan on educating them on what really can feel like, and you guys disagree with me if you want. I feel like it's just non-traditional. I have trouble when I'm out talking to people about real estate investing because they just look at you like you're crazy. They're like, I don't know, what are you talking about? Like storage? What do you don't know anything.
Mm-hmm.
So what's your plan on educating your kids on this is how it works versus so much of what we hear of like, oh, 401k, work 40 years and hope it works out?
That's a great question. And I'm still trying to figure that out. Obviously, with my oldest is 3 today, and my
Oh,
youngest,
awesome.
Oh, happy birthday.
yeah, thank you. And the twins being 5 months old, it's kind of, how do I, not just in the financial standpoint, but my wife was a school teacher, and her brother and dad and everyone has been, public school teachers for years and years and years. And now I look at the education system and what's being taught, and whatever your stance is, left or right, but you know how I want my kids to be raised and what I want them to learn. So also, it's just from the financial standpoint. I think it's you know don't put the what's the saying? Don't put the cart before the horse. So many people are don't want to they want instant gratification instead of delayed gratification. So that's kind of what I want to teach my kids is make sacrifices now, whatever that may be, to set yourself up for the future. And I think obviously real estate is a fantastic way to go about that. Um, so yeah, still trying to figure that out, Jason.
I love it. And I'm sitting here like thinking about jumping in. I'm letting it wash over me because what a fantastic point about the instant gratification. It's only going to get harder in our culture and society today with everybody on social media is an expert and everyone that posts a video is famous, and it's obviously not true. But how do you teach your kids that? We're having not trouble, but my 9-year-old, soon to be 10, he wants he wants a tablet, a Switch. He's got the TV, and the point is he wants to pull up YouTube, and some of it's fun. He's like, "Oh, I want to watch a video on learning how to draw." What a spectacular thing,
Right.
for it to be on YouTube. But then you catch him sometimes, and he's watching 5 kids do trick shots,
Right.
and it's like, it's hard to toe that line of a little bit of entertainment, a little bit of learning, and then when you zoom all the way out to how are they going to spend their 20s and 30s, and how can we show them that what they're learning along the way in school and the traditional routes and the stock market, one, isn't the only way, and maybe it's not even the best way.
Yeah. You guys hit the nail on the head, and I really like the piece about instant gratification versus delayed. I think that is kind of the heart of the issue, and I think we're seeing that play out in the financial world today. I think you see the meme coins, right, and in crypto, right, where these people are making 5,000% returns in 24 hours and then losing it all,
Yep.
right, and then as well as like the Reddit, GameStop type plays as well. The generation that grew up with that instant gratification is now at the point where their money is now being entered into the markets. And what we're seeing there is we're seeing these people that do want the same gratification that they get on the YouTube or on the social media or whatever. They want that with their money as well. And I think it's only going to continue to get worse and harder. And from a raising your kids perspective, just like Vinod said on the last pod, real estate isn't instant gratification. And but that's the beauty of it, right? And the sustainability of it. And I think, what a perfect idea to start kind of trying to have those conversations with your kids and teach them about the benefits of delayed gratification and the kind of compounding interests of that.
Yeah, and I think, James, that was a good point. Is real estate is not instant gratification. It is very much delayed gratification, and because I haven't been in the space very long. I've owned since 2019. However,
Mm-hmm.
Between different properties, there's different benefits of I've a heavier cash flow with one property. I've more, equity on one property. But also there's times where I forget about just like principal pay down. Just holding this asset long term. I think last year I gained, I think every year at this point, I have the 90,000 in principal pay down between my properties, just holding an asset. And
Yep.
it might not pay me anything, but well, guess what? I hold that over 10 years, delayed gratification, and I just gained 900,000 in equity. So that's a
Yep.
good point.
Absolutely.
I had a thought and I just lost it. Instant gratification. Oh yeah, it's my favorite saying. Real estate's a get rich slow scam.
Yeah.
And I love framing everything as a scam because everything is a scam.
Money's
Depending
not
on how
real.
you use it. Money's not real.
That's
We
right.
talked about that.
Yeah.
Real estate's a get rich slow scam,
Mm-hmm.
which is great. It's a great scam to be in. I want to end on this. The opposite of diversification is obviously specialization. And it could feel risky going that route. People, what do they say? Don't put all your eggs in one basket. You ever heard that?
Mm-hmm.
That's an Easter saying for you.
Perfect. I was just about to say that. Perfect Easter saying.
Don't put all your eggs in one basket unless you're at an Easter egg hunt.
Mm-hmm.
Because they only give you one basket.
Yeah.
Yeah. Took that too far. So if you're going to specialize, that can feel riskier. But Jordan, you had mentioned this on your post that we started with about finding something you know and are good at. And this could be a million things. It could be a million different things on how you leverage that one specialty that you have, because you can diversify within that specialty, if that makes sense. Can you kind of expand on that for me, Jordan?
Yeah. It the first thing that comes to mind is going back to kind of education and college. I'm a big believer in continuing education and learning and growing. Now, I won't get into my opinions on necessarily college and all the scams going on there,
Yes.
but once
Thank you for
again,
using the S word.
We'll bring you back on when we go into that topic for sure.
yeah, but once again, to specialize. For example, like I majored in marketing, which is kind of specialized, but not really. It's pretty broad. If you do like business administration, that's really broad. So now, my, younger kids that I coach baseball at high school, and they say, "Hey, Coach Brown, what should I do?" I want to do business. And I was like, well, you need to specialize. Do accounting, do financing. Specialize, be an engineer. So there's tons of things that you can do, but nowadays it's not. Oh, I don't have the broad knowledge. I'm focused. Even from a professional standpoint. Um, so I think leveraging whatever you're good at, and I have some colleagues that I know, and they do construction, and they do specifically commercial construction. So what are they doing now? They're going to that meetup that I told you about that I drive to every month. I drive 3 hours just to get in front of people, and now they're getting plugged in with these developers, and they help develop commercial properties, and they leverage their specialization in the construction space to now own these large assets.
I love it.
Mm-hmm.
Jordan, thank you so much for joining us today. So many knowledge bombs dropped.
Mm-hmm.
I love it.
Yeah, I think people will get a lot of value out of this.
Yes. And I know you have a 3-year-old's birthday party to attend to.
Thanks, guys. I had a great time. Thank you for having me on.
Awesome.
Thanks.
You know who's going to be mad?
Hmm.
Vinod's going to be furious that he didn't get the applause button. What a great conversation.
Yeah.
Hit me. I'll do this to you every time because this gives me time to think about my favorite part.
Okay.
Hit me with a key takeaway for you.
I think just kind of the overall theme about how the curiosity plus follow through can equal so much success in real estate, right? You don't necessarily have to be a genius in real estate. You don't have to have a dad who runs a real estate company. You don't have to do any of that, right? Just with the internet and some networking, and you can jump right in. And I think that plus the key takeaway of sweat equity matters. I really like that piece and I think listeners will find a lot of value in the fact that the sweat equity does matter, and you can jump in with a little bit of money with someone who has a lot of money. And if you're willing to put that sweat equity in, it can take you places.
Yeah. I loved the conversation on education, and there's a few ways to go there. He had his grandfather who dropped that piece of knowledge on him early, and he said, okay, what does that mean? And what is it going to mean to me? That's amazing. And personal story for me, my dad used to like to joke around and say, you need to find a good white collar scam. He liked the movie Wall Street and Greed is Good. And he used to love saying stuff like that. And I think he probably had a good point in that, not that you need to scam an old lady out of her retirement savings.
Yeah, you don't need to go full Jordan Belfort,
Wolf
of Wall Street.
That's right.
Them, but yeah.
But you do need to, it's a good idea to, find a good investment strategy and something entrepreneurial. That was a big takeaway for me. And so having that person in your ear, and when we think about like our kids and our kids' future, it's like, they're going to do what they're going to do. Maybe they watch too many trick shot videos, and who knows, maybe they become the next, not Mr. Beast, who's the other one that they like, the trick shot guy.
It's like a group of guys, isn't it? Yeah. I can't remember the name.
I can't remember. Maybe they do that and have some success, but all we can do is be in their ear and say, there's more than the stock market. And diversification is obviously not a free lunch. What is for lunch?
I don't know.
Don't put all your eggs in one basket.